Good morning. Today is Friday, June the 23rd. The time right now in Singapore is 7:51 in the morning. Overnight, there was a lot of fireworks in the currency markets. Basically, we have three major central banks in Europe actually hiking interest rates. We have the Bank of England, we have the Swiss National Bank, and then we have the Norges Bank, which is the Swedish National Bank, all hiking interest rates yesterday. And the one that took the cake was the Bank of England, hiking more than the market expected. Market was basically expecting a quarter basis point rate hike by the Bank of England. Instead, they hiked interest rates by a muscular 50 basis point to take the interest rate in the UK to the highest since 2008 at 5%. Now, this, of course, is on the back of a rising inflation in the UK. The day before, we saw UK inflation, at least the headline numbers, held constant at 8.7% from 8.4%, when the market was expecting a dip to 8.4%. But when we look at the core CPI numbers, which is essentially taking out the food and energy component of the CPI calculation, we see that there was a surge in the CPI numbers from 6.8% to 7.1%. So this is the basis in which the Bank of England did what they did yesterday night by hiking interest rate 50 basis points. But when you look at the chart itself, when we look at this chart here, this is the 4 hours time frame for the sterling versus the dollar. We can see that the initial reaction to the hike in interest rate by the BOE saw sterling went up to 128.40 before it was brought back down during the New York session to 127.25. So this actually caused the market to actually pull back quite drastically now, but now the market is back above 127.50 levels. So basically what happened was the week itself, we have a low traded in the sterling at 126.90, and this is a bracket of prices which I believe the market has been holding very well, because at technical level, the area between 126.70 to 127.40 represents a 38% retracement from the low at 127.50 levels. So we can see that this market here actually stabilized here, and it does build a case for an extension of this rally going forward. Now we can see that the market from the low of 123 even has actually traced out a potential 5 wave here, and we are right now finishing the 4th wave corrective move, and it's getting ready for a surge beyond 128.50 that we saw last Friday. So we can see that potentially we can see a surge towards 130 levels, which is my current target. So this represents, for the current price itself, about a 250 pips potential here. So this is something that you can look out for. And in the meantime, I wish you guys a great weekend ahead. Bye-bye. Take care.